And welcome, it's Mary Ellen McGonagle here with your weekly Edge show. Today, as usual, we're going to take a look at the broader markets, see where we closed for the week and beyond. We'll take a look at those S&P 11 sectors and some highly impactful industry groups, always on the lookout for sector rotation that may be shaping up. Also, I will share with you some of the news that drove price action last week. And then last up, viewer question of the week. And the question is all about uncovering newer areas, given that a number of these strong areas are really extended out of buy points. So we'll get into that as well. First up here with that news from last week, one of the most impactful was Wednesday's Federal Reserve meeting notes being released. It was revealed at that time that the Fed did decide to skip the interest rate hike at that meeting, but also that they do see 2 additional rate hikes before year end. Now, originally the markets did respond with a sell-off, but it did stabilize and the markets really took it quite well. I believe it's because a lot of the uncertainty is out of the way and investors do not like uncertainty. We also did receive information relating to core inflation data on Tuesday and Wednesday. And in the end, while inflation is not receding, it's not going higher. So that was also reassuring for the broader markets, with that producer price index falling 0.3%. And we did see that the prices had the smallest increase since February of 2021. We also saw weekly jobless claims come in, and they were at a historically low level, also signaling the potential for an economy that remains vibrant. All of this is helping to reduce recession fears and keeping some of these areas of the market alive. Retail sales came in 3% increase, and consumer sentiment rose as well to a 4-month high. This is all about consumers continuing to spend as they see inflation receding. Another good note for the economy. Fed Chair Powell will be speaking next week, 2 days, and that's going to be closely watched for any further hints relative to monetary policy. We're also going to get flash PMI and housing data next week as well during that shortened holiday period. So let's take a look at those broader markets. Where did we close for the week? Here we are with the daily price chart of the S&P 500, and I have this 4,300 level noted here. This is an area of importance because the fact that it for some time acted as long-term upside resistance. We did see a move above that 4,300 level last week, and we're continuing to advance above that. That's very good news as it relates to the possibility of a continuation rally. On the momentum side, we can see the RSI is up here in an overbought position, indicating that we could see at the very least a period of consolidation, potentially a pullback. Certainly worth noting, we do have the stochastics, a faster moving momentum indicator up here in positive territory, so positive momentum in an uptrending broader market. Of note is the fact that we did continue to see broadening out among the markets, among participation of those various sectors. This is an equal weighted S&P 500, and you can see it's continuing to advance higher after those employment numbers in late May signaled that the economy, again, may very well be on firmer footing than was thought. So in turn, we did see a pretty sharp advance in these cyclical areas of the market. So you do want to see a broadening out to indicate, again, another sign of possible further upside for those markets. Now, let's go ahead and take a look at the 11 underlying sectors in the S&P 500, and this is a 2-month daily price chart view. I've added a relative strength indicator, and the view is sorted in descending order, so strength to weakness. The movement here is very slow. It's not going to be sharp, but it certainly is going to be very telling. Up here at the forefront, we have consumer discretionary, technology, and communication services. These areas have been up here at the forefront, a lot by way of AI and other high growth areas that are on the move higher. We can also see industrials, and this is part of that move into cyclical stocks, XLI. You can see the continued advance with the group outperforming the broader markets again last week, up 3% relative to the S&P 500, up 2.7%. As we continue to advance, of note is a potential rotation back into consumer staples stocks. You can see that they had a wonderful advance in the beginning of the year, all about strong earnings, fell out of bed as high inflation fears really moved consumers to, instead of being loyal to those staples, Pepsi and so forth, they began moving down and buying brands that were lower priced. But we are seeing a bottoming out and a downtrend reversal shaping up. Very interesting to me. There are some nice growth names in there that are on my watch list and will be added as they continue to turn more positive. Another area of note that was on the move later in the week, and this is where I'm going to take us at the end with that viewer question about getting into areas that are a little more in the beginning stages of a potential advance. This is healthcare, XLV, and the daily chart is showing that it has broken back above this 50-day simple moving average with your momentum now in positive territory. From here, we're going to take a look at some of the underlying industry groups that are really highly insightful as far as telling you where money is flowing into and where that strength is. First up here is IGV. That's the software ETF. And take a look. It was up over 5%, very sharp advance due to earnings from both Oracle and Adobe really doing quite well this week. Strong results and AI related moves in there as well. Semiconductor stocks, SOXX, also outperforming, 4.2% gain, another AI related play, but also chip demand being seen elsewhere as well, primarily electric vehicles. We can see that the group remains in a nice confirmed uptrend. However, we are overbought, and we can see going back about 4 weeks ago, similar price action and how that did cause a pause for these semiconductor stocks. Moving along, I did want to share with you another area that's on the move, and that's the transportation. Dow Jones Transportation Index up 4% for the week. Another cyclical area of note you will want to keep an eye out on Monday for FedEx is due to report their earnings. Here is an area that I will be sharing with you a couple of stocks, and this is IHI, Medical Devices ETF. And when the group gets going, it can really outpace the broader markets, all about these faster moving medical products companies. You can see this gap up here on Wednesday. Nice continuation rally, all about comments from a particular company at Goldman Sachs annual global healthcare conference. And it's interesting to see how that can really move not just one stock, but the entire market by way of these healthcare device stocks. So from here, let's go ahead and I'll share with you a couple of those names in that area, but we can take a quick look here. I have Caterpillar up from an earlier presentation and highlighting this is a certainly bellwether name among cyclical stocks. It did receive a significant price target upgrade by Bank of America, and also Caterpillar raised their dividend as well. I view it as a very important name among these cyclicals if you want to get a feel for really how that area is advancing. So from here, let's take a look at a medical products stock that is on the top of my watch list. It's Edwards Lifesciences, EW. And what I wanted to share with you is the fact on that Wednesday news, you can see the gap up into a nice uptrend, which in turn pushed the stock out of a base. So a base breakout after a gap up is very, very strong pattern. We can see that the RSI is in positive territory and trending higher. And then also with this MACD, we had that crossover black line up through the red, just entering into positive territory. One other stock that we can take a look at in that medical product space is Boston Scientific. BSX, and you can see that it has very similar dynamics by way of a gap up into a base breakout, which also in turn pushed the stock higher into a nice uptrend. And then we can also see the momentum shift very early in its upside advance here, and more upside potential ahead, certainly, but you will want to keep an eye on these momentum indicators here, because we have had short-lived rallies in the past, and your RSI is going to be your most critical tell as it relates to an uptrend ending. That's it for this week, everyone. That's it for this week, everyone. Have a fantastic weekend. I'll look for you again here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.